So it has been a really bad week for banks, one bank in particular being shut down. But believe it or not, there's actually more going on that's affecting gold price, today's price at least. We're going to take a look. So there's a lot going on right now affecting gold prices. Not exactly sure where to start. We have jobs, bank liquidity, long-dated treasury bonds, short-term treasury bills. There are also geopolitical events, but we're going to keep those separate for now. And all of these things are competing signals for gold price. And like always, the current moves are not exactly good indicators for the longer-term trend. So we're going to split them up a little bit. We're going to take a look, and we're also going to look at gold's role as a popular risk-off asset, because the same forces, or at least the end result of all those forces together, are affecting that as well. So I posted a short video comparing the purchase of a gold coin to the purchase of $2,000 in treasury bills. I think that's a good place to start. It's going to make sense in a minute. Check that out if you want to see the matchup, but the highlight is simple. A 52-week treasury bill pays 5.28%. It's a guaranteed return, and the way that it works is that you buy the T-bill at Treasury Direct, or you use your brokerage account, you pay $1,894.40, and then at the end of the term, $2,000 is deposited back into the account that you used to make the purchase. It's pretty simple, but my point in making the video wasn't to tell anyone that that's what they should do. It was more demonstrating why the price of gold has not continued up in the current high inflation environment. And that would normally be positive for gold, but there are easy alternatives to gold right now in traditional risk-off space. Those alternatives have historically high returns right now, and like I mentioned before, they're guaranteed. Now, it didn't take long for people to start pointing out skepticism of any kind of government guarantee in the comments. Well, we're going to get that anytime Treasury products are mentioned, but if we widen the lens a bit, long-dated Treasury bonds are taking a hit right now. These are different than Treasury bills, which mature in 52 weeks or less, but they're in the news because of what we're seeing happening with SVB's financial liquidity issues. That's Silicon Valley Bank. They're the 16th largest U.S. commercial bank, and their stock price fell 60% after scrambling to cover nearly a $2 billion loss after having to liquidate part of their bond portfolio. Now, several things played into that, but Treasury bills come into play here too, since not only are they competing with gold at the moment, they're competing with bank savings accounts. Cash deposits are down. Some of that's affecting other banks too, and the SVB issues have cascaded into other institutions. So banks have had a really bad week. And speaking of bad week, it's also worth noting that SVB holds very large amounts of cryptocurrency on their balance sheet as well. So it's kind of a double whammy, and maybe even a quadruple whammy. So what's going on with this bank, and really, why do we care? Well, SVB was holding long-dated treasury bonds, not the short-term treasury bills that I mentioned earlier. And if you sell a treasury product before its term, well, you take a loss. And SVB, they had to do that to shore up their balance sheet. They took a $2 billion loss, or just about $2 billion. And I don't know what's on their balance sheet, but looking at the news articles, they're a big tech startup lender. Makes sense. Tech has not been having a banner run lately. And then if you look at the week that cryptocurrency had with Bitcoin falling below $20,000, well, there's some problems. You add to that more and more people and institutions are buying treasury bills at that guaranteed 5.28% rather than depositing their money in banks. Well, this particular bank is having a problem. And the fact that deposits are down, that's not only affecting SVB, that's affecting a lot of banks. So these other banks are going to have their own problems with liquidity as well. Or at least that's the concern. So one way this rolls back to gold is its role as a risk-off asset. Short-term treasury bills, they might seem like a better place to park money to some, but now we have this bank instability issue, whether that's real or imagined, and that's going to be a reason that some people and some institutions want a larger position in gold. And if you watch what's happening with SVB, it's just getting started. They've just been shut down by regulators, and their bond liquidation, that has effectively been a fire sale on bonds. So we'll see what happens there to the price. But the 10-year bond yields fell 14 basis points overnight. That went down to 3.77%, and that affects the balance sheets of a lot of banks. Okay, so here's the deal. I'm sure there are people making videos right now. They're going to tell you get all your money out of the banks. Banks are going to collapse. Bank runs, it's going to be chaos. But that's where this goes from useful information, things that you should watch for, to clickbait fear peddling. I'm not here to tell anyone what they should do. SVB is a big bank. They've just been shut down, and that could definitely create waves. It's certainly a possibility, but does that mean that your bank will collapse, that you'll lose all of your money if you leave it in? Maybe you should get it all out, put it all into gold and silver, and then just wait for it to shoot the moon? Well, it might be a little premature for that. So I'm not here to give financial advice. I'm not qualified. I'm just kind of here to ask some questions. I'm not afraid to call out some unqualified advice of others. Maybe they should be asking some questions. There's a lot going on. The problem that we see over and over is that short-term news and events, they tend to get hyped and extrapolated. And that leads to people using the closure of one bank as evidence for a narrative that maybe they've been trying to tell for 3 years, more years. It gets very difficult to separate fact from hype, good information from bad. In the short term, though, there's really no question it is affecting short-term gold prices. I was expecting job numbers to be cooked like they were last month, and that would control the story. Big job numbers would have made investors sure that we'd see 50 basis point rate hike again in March. USD would pump, gold would fall. And what we got instead was a mixed report with several key negative data points, like unemployment increasing to 3.6%. Add to that the story of bank liquidity issues that we're having right now. Gold price actually went up. So what comes next? Well, not much has changed. Inflation is still high. Jobs numbers are still coming in strong. Rates still going up. USD comparatively strong. And the US Treasury products, they're still returning big yields. So as much as I'd like to say that a moonshot is coming, I just don't see this leading to any kind of sustained breakout for gold. At least not yet. I mean, we've all heard the story of the Zen master and the little boy. Little boy gets a horse for his 14th birthday. Everyone in the village says, how wonderful. Zen master says, we'll see. A few years later, boy falls off his horse. Villagers all say how terrible. Zen master again says, we'll see. War breaks out. All the young men have to go off and fight. Now you get where this is going. These are one-off events, and in this case, they were changing the course for that boy, but this is more a case of one-off events just being one-off events. I think the wider picture for gold price still looks a lot like it did last week. And if you have more than $250,000 in your bank account, well, might make sense to get serious about spreading that out. And if you don't, you still have some protections, but diversification is just always a smart thing. So let's call it good there. I have a poll running on what we all think is next for gold, $1,799 or $1,900. $1,799, it's winning 2-1. So it looks like a lot of us are thinking the same thing, not quite out of the woods yet. But let us know what you think. Hit us up in the comments. And while you're there, be sure to hit the like button. It's a big help to the channel. Make sure you're subscribed if you want to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.